back to Outlook 2020. We are in conversation with Ridham Desai of Morgan Stanley, Surendra Goyal of Citi India and Gautam Chhaochharia of UBS. As you can see on the screen, this has been a year of complete bipolarity. In terms of Nifty, it's up 12%. The small cap index is down 12%. Ridham, let's now discuss a couple of sectors. I'm intrigued by your neutral stance on telecom because, like we saw, Bharti has been one of the stocks of the year, so has been Reliance. And Mr. Mittal said that tariffs have bottomed out and ARPU of 300 rupees is possible. Don't you think a decade-long bear market could be ending here?
Yeah, it's possible, I think the telecom sector may have seen its worst.
Okay.
Yeah,
so why not
we were underweight. I think we closed it out in July or something. It was very lucky because we closed it out just before things started working up. But I went from underweight only to neutral. I regret I didn't go overweight.
But any chance of turning overweight?
Even if I was, I couldn't have told you that. But but no, I think it looks like the worst is over. We'll have to assess what share prices have already done and put it into that context, because share price is obviously ahead of the game. I worry slightly about the policy environment. I'm not very clear about what is being attempted. So let's see that also, because are we going to make this into a utility sector? See, once you start putting tariff floors, tariff caps, that means you're an electricity sector. That's what electricity is, right?
Yes,
then you might as well just default to return on capital. That, telecom companies can earn 12% return on capital, and you can then decide what your tariffs are, right? So that's a small risk here. I'm not saying that's an active risk. I understand what we are trying to achieve, but that we have to keep that in mind.
Okay, that it can behave like a utility. Yes. Now, other sectors. What's your sense about IT itself, Surendra? Will, if things are so bleak, will everyone go defensive? Is IT a good bet?
So I think if you look at this year, earnings have been revised down. The domestic story has looked tougher and tougher, and yet it's not like IT has been a big performer. So I think even in that sector, we are seeing pressures on multiple areas. Like large banks is one of the biggest client base for these companies, and large banks have generally been in tightening mode. And also there is a lot of insourcing which is happening, where work is being given to their own captives. I don't think those trends are going to go away. So our view on IT still remains that the kind of growth rate that we have been seeing, which is high single digit or so, that kind of growth can continue. And in the absence of any meaningful rupee depreciation, and our view is that rupee will be in a band, the margins will still be headed lower. So we are talking of earnings growth which is fairly muted. And in that kind of a scenario, we don't see IT outperforming. And that is the reason we still have a small underweight on IT services.
Okay, interesting. Since we discussed utilities, though not in the context in which we should have discussed, but you have a positive view on utilities. That's a space which has sort of underperformed so much, but you're betting it on
Still betting on it. So it's clearly not worked this year for various reasons. The valuations are clearly attractive. There are stock-specific issues. It reflects to some extent our portfolio positioning view also for the market, that at these levels, you're better off hiding in utilities rather than chasing cyclicals at this stage. So it's a mixed bag, but we're still sticking to our overweighted stance.
Okay. Outsized gainers year to date in the Sensex. Bajaj Finance up 54%, ICICI Bank up 50%, Bajaj Finserv up 43%, Kotak Mahindra up 37%, HDFC Bank, 21-25%, but still all rank outperformers. Can we go on like this, or should you shift bets elsewhere for 2020?
No, so some of these, I think banks will continue to do well because they are in a secular uptrend. I think on a long-term basis, India remains under-penetrated on credit. So there's a lot of opportunity to grow, and look at the balance sheets of these.
8 times Bajaj Finance.
Yeah, no, see, as I said, some of them, and I'm not going into specific stocks here, but I think the balance sheets are in very good shape, and there is enough capital for them to actually grab growth in a market that is disrupted, because the NBFCs have been shuttled out and there is growth for the asking. So most of these people can grow as they wish. So then in that environment, particularly when other places we are not so sure about growth, why won't there be a bid? So I think you should also, when you said Bajaj Finance at 8 times book, I would urge you to look at it from a
earnings growth.
Well, Yeah, well, essentially a residual income perspective. That's how we look at banks, right? So what excess return over cost of capital does Bajaj Finance make? And you look at that and then you discount it at a pretty low rate, because that's the rates in the system. Then you make a judgment on valuations and not just on the headline price to book. Because Bajaj Finance does have a very very healthy return on capital.
Yeah, a very, very strong ROE as well. Surendra, Pharma made a comeback towards the end of the year. It's of course a more stock specific story. You can't take a sectoral call here, but still, what would be your view on the large cap Indian pharma?
So on pharma, we had been underweight for a while, and in the recent outlook, we have actually gone to neutral. Healthcare is an overweight, but that's more hospitals
and path labs.
So if you kind of take that out, we have gone to neutral, because in some of the stocks, we think that a lot of pessimism is priced in. I think the whole regulatory situation makes people very, very nervous. And because of that, some stocks are pricing in levels where even if that regulatory risk is to be plays out, even then you could still argue some upside. And which is why we think that risk reward has kind of gone to an extreme point, and which is why we have taken one step and gone from underweight to neutral.
Okay. I know you said no to small caps and mid caps just yet, Gautam, but if I put a gun to you and say, give me some mid caps, which sectors would they be?
So the theme, they say that clearly secular themes top down. So the simple way to look at it is which themes or segments in the small mid cap world can grow much more than the broader market or broader economy. So stocks and sectors in the media space or entertainment space, healthcare services, diagnostics, in building materials, these are segments.
Okay, I don't even have to put a gun to you, Ridham. You said mid caps.
Almost every sector. I'll start. Auto ancillaries, mid-sized corporate banks. I mean, we can, even small, I agree with them, healthcare services, gas companies if they are still mid-cap, because they've gone up a lot. Almost every sector, industrials, very big space, lots of mid-caps that look really juicy. So there is no dearth of opportunity in the mid-cap space, just you need a little bit of courage, because the charts look terrible, and they've all done this and they've come back a little bit, and now having come back, you feel like, oh, you missed the bottom, but then you look at it from where they are, versus the previous high or even 1 year ago, they are still reasonable.
Ridham, this is Sonia's favorite question, but let me ask you. So, blank check question. You said so many, but point out to one.
Okay,
the best of the lot.
Auto ancillary, industrials, and mid-sized corporate banks.
Okay.
Yeah, 3. I'll shortlist.
Okay, not 1 but 3.
3, yes.
Surendra, your favorite. 2020. I don't want to lose money, or if you want to help me make best money, which would be the one sector?
So I think if you see our overweights in the model portfolio, so financials has been the biggest overweight through this year.
And again, the big
and
boys.
Continues. And again, it's essentially the visibility play. So we have added some
only
smaller
the Nifty
names.
financials?
We have added some other names as well. There are some incremental names, but it's still wherever we are comfortable with earnings visibility, those kind of plays. And then secondly, healthcare, which I said, and then there are some very like industrials appears overweight, and I get a lot of questions that with whatever is happening. So, but those are very stock specific calls.
Okay. I know we'll have run out of time, but we didn't discuss something very important, so let me bring it up. Second half of this year, you're going to see massive FPI flows. Unprecedented money will flow into the country because of the change that was announced on Friday last. Yeah.
Okay.
The estimate that we have is $14 billion at the minimum. Okay. It's a huge amount of money. It will have to all come in within a month on, I think trading volume wise, maybe around 45 days. It's a lot of money waiting to hit us in June.
Okay.
Okay.
That's important.
So share prices are not going to get weak, because you know how these things trade, right? They will trade ahead of the event, and the very specific stocks get affected by it. Those are the stocks which are already seeing the bids today, 6 months ahead of the event.
Okay. One point which we didn't make, Surendra, something that you want to add to the Outlook 2020?
No, I think we have covered a reasonable amount of ground. I think what a lot of us focus a lot on domestic factors and variables. What we have seen over the past few months is global central banks easing again, and which has led to a lot of flows. And that's a very important variable when you are looking at absolute returns. Okay. And based on whatever we see today, that could continue. And that itself would keep on driving the markets higher, and which is why I think relative to EM, is an important benchmark. At least when I look at India's returns, I always benchmark it to EM or global markets, because on absolute basis, these global variables could have a big bearing on where the markets are.
Okay, one final point, Gautam, to you. Any sort of key factor in 2020, sort of which could be a bit of a dampener, or which could provide any kind of thrust to the market in 2020?
So three ones. We call it 3 Ps. Policy. If you see a more aggressive policy action, specifically RBI, property sector, that's a low-hanging fruit in our view, from macro also, and privatization, which has a big potential to surprise.
Okay, now that's a lot of ideas that our experts have put on the table, and a lot of optimism as well. $14 billion at least coming in the second half, and maybe early second half, and maybe the markets will discount it even earlier. So it looks like we'll have a great 2020.